Hello there, FOREX Mavericks. This is Rob Ronald. It is March 4th, 2025, and we had a wild day today. Let's go ahead and jump into it. In this session, we're going to be covering the news of the day. We're going to take a look at all the commodity markets, take a look at crypto, take a look at Forex, and we're going to go look for seeing where the best place to hunt for trades is. Last week, I talked about the pound and the yen on the long side and Aussie Kiwi on the short side, so let's check in on those.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, let's go first to the news of the day. Equity markets continue to fall. So equity markets have been in a little bit of a free fall lately, and we all know it's because of the tariffs. Well, guess what? We got some more information. The tariffs yesterday officially went into effect from the U.S. on Canada, China, and Mexico. And today, Mexico and China announced that they are basically putting in retaliatory tariffs on U.S. goods. So officially, the trade wars have begun. We're supposed to hear from Mexico in the next couple of days on their tariffs against the U.S. And then we're supposed to get U.S. tariffs against Europe. And of course, Europe is going to come back and retaliate as well. I'm about to talk about tariffs here. I'm not making a political statement. It's not political. It is undeniably negative for the economy in the short term. I understand that some people like this, and some people say, hey, this is going to be better in the long term, feel a little bit of pain now, pay off in the long term. History will tell. But right here, right now, tariffs are universally bad for the markets, and they do not like it. And that's why we've been seeing such a big sell-off. We also got one little bit of news out of Australia. Australia retail sales, as expected, decent growth. So again, pretty much every economy across the world, decent growth, not great, not too slow. Inflation's starting to creep up a little bit. That's really the story around the world. So let's check in on Forex movements today. We're going to take a look at this yen. I want to really focus on the yen today. The yen was the best performing currency on Sunday and Monday. And you can see big pullback today. And at one point, the yen was up nicely on the day, but we got a big reversal in equities that I want to be talking about. The European currencies were nice. The pound wasn't as strong as I thought it was going to be, but take a look at that euro. And the Swiss franc was up over 1% today and really pulled back as well, along with the yen off a risk move. So again, we're going to be taking a look at these currencies because I think this is where you want to be playing. The Aussie and Kiwi, yes, they went up today, but again, there was a big reversal in markets and they basically just went to neutral, went to break even. That is not a great sign. Same with the CAD. CAD bounced off the bottom, but just could not get anything going. At the end of the day, the S&P was down 1.22%. But I want to talk about the intraday move. I've been a trader here for 28, 29 years. And over those 29 years, I have watched hundreds of thousands of hours, at least, of watching charts move, watching candles form, studying charts. And I don't want to get into conspiracy here, but I'm going to get you into my opinion because I don't want to get into conspiracy because there's no upside to believing in conspiracy. All it does is it takes away your power to just say sometimes the markets are irrational because as human beings, we always want to put reasons on the irrational. If you take a look at this intraday chart here, you can see that we fell overnight and then fell the first hour or two, and then when the volume dried up, you can see that we actually started to creep higher. This is what I think happens on days like this, and it's been a while since I've seen a day like this. I remember seeing them all the time back in 2000, 2008, 2011, a little bit in 2022. This is what happens when institutions are selling. So again, we get all the sells in the morning, and imagine that you are a trader on a trade desk. And again, you do some discretionary trading, meaning that you get to decide what you do, but you also are filling orders for your firm's clients. And let's say that you get a note that says, hey, we have a client that's going to be liquidating 10% of their holdings today, and this fund has $100 billion. We're going to be filling a lot of orders at the close. For you to sell a lot of shares, there has to be buyers there. And after the first little bit of selling, the selling exhausted stuff, but there really weren't a ton of buyers. And so for these funds to sell, for these traders to get good prices for their clients, they need to basically encourage people to buy. So when the volume's low, they go in, they buy some, they move it up, they trigger some short selling, some short covering. That buying comes in, the momentum traders come in, and you can see that they march this up on very little volume all day long until the very end. Then they dumped. And take a look. They were able to dump all these shares at the close higher than the price it was in the morning. That is showing me that there's institutional selling going on, and institutional selling doesn't last a day. It lasts weeks. I'm very bearish on these markets. I think they are going to be going lower. Let's take a look. Crypto had a nice reversal off the bottom. At one point, crypto was down like 6 or 7%. It rallied to close. Some of them closed positive. Gold was up. Gold is looking really like the only thing that wants to go up here. Not really being hit by the volatility. In crypto, here we are with the final numbers at the end of the day. Bitcoin ended up going positive, but again, at one point, down 5%. All we're getting is little bear rallies at this point. Nothing really showing us that there's any sort of reason to believe that the crypto rally is back on. Let's take a look at equities. Here we have this equity market, and I've been pretty clear the last 2 weeks, and they said, look, yes, things are looking bearish, but until we break this 5,800, 5,840 area, because we've broken it before, and we broke it yesterday, we broke it with today's candle, but I've been saying until we break down, bounce, and fail, that is the sign that we have changed from a sideways market to a bearish market. So again, this market is not there yet, but we are very close. 1 or 2 more candles, we're going to have a clear break, and then again, a bounce or a base and a fall. That's it for this market. Definitely a bearish market. So the market is leaning bearish here, but we can't go full bear yet. Let's take a look at the schedule over the next 24 hours. You can see there is not a whole lot here. There is not a whole lot on the calendar. So let's just go ahead and skip and take a look at some charts here and try to find the best setups. I'm going to start off with the yen here. This is the yen basket, equally weighted against the other 7 currencies we trade. And you can see yen was in a nice clear uptrend. So for the week, it was looking really good. For the week, it was actually looking quite well here at the start of the week. You can see big pullback. So big pullback on yen. And if we take a look at a 4-hour chart, okay, it was a pullback. That's it. We definitely have some support in this area. We'll see if it bounces. I like the yen here off of a pullback. Take a look at the daily chart. You can see lots of reasons to start to like yen off of a pullback where it had a nice run. I mean, take a look at the candle here on today. At one point, we're up very nicely. Reversal. We love these little entries here where we have a trending currency that has a pullback. Then we can go ahead and get into them. We see the same thing with the Swiss franc. Same thing with the Swiss franc. We have a nice run here, nice move higher. This one's not in an uptrend on the daily chart. You can see on the short-term chart, 4-hour, nice uptrend. We're getting a pullback. These pullbacks give you little opportunities to get in. Looking at the euro. The euro is the strongest one at the moment. Nice high base here, breakout. This one's probably run a little bit too much. I really like the Swiss franc. So Swiss franc and yen are my favorite ones because I do think equities are likely to continue to fall. That tells me I want to be more risk off. Let's take a look at the risk currencies. And I've said this for the last week on the Kiwi and Aussie, is that, look, I don't think the Kiwi and Aussie go significantly lower, but I still think they're the best shorts out there because nothing's really going lower. I mean, they're drifting lower. The only thing outside of Aussie and Kiwi on the downside is the dollar. And I actually kind of like the dollar short here. If you take a look at the dollar short, you can see we just have been falling, had this nice bear rally, You can see it's turned over. Momentum is absolutely turned over here. And on the downside, we've got a -2 on the dollar for momentum. So I even like dollar short here, but I think it's a trickier play than just being short Aussie or Kiwi. So here's our velocity scoreboard. Euro right now is the strongest. I'm looking at Swiss franc and pound. I really like the Swiss franc. That is going to be number one. I like the yen too, but right now the yen hasn't bounced yet off of their big pullback. So the yen is going to have to recover a little bit. But right now, Swiss franc to me is looking strong. I like Aussie Kiwi short, but they've, again, just like the yen, had their bear rallies today. So they're having a nice little bounce back up. We need to see them roll over and start to get weak. Dollar to me is the best looking short at the moment. So let's go ahead and pair up dollar against Swiss franc and possibly dollar against euro. All right, looking at dollar Swiss franc, let's take a look at this on the daily chart first. You can see this has got a lot of the things we like. We're starting to work into a downtrend now, the downtrend of lower lows, lower highs. You can see we just made a lower low. You could take a look at this chart and say, hey, you know what, Rob? We are down at the bottom of this trend line. Shouldn't we wait for a bounce and maybe get short when it bounces up? Sure. That may not happen. That may not happen. The momentum right now is definitely on the downside. And if you're looking to make a trade here and now, you want to stick with this one. Yes, it may only go down another 30, 40, 50 pips. But remember, these charts can keep falling along with the trend line. We could easily just keep going lower. We could easily just keep going lower with this line and have a really nice trade all the way down here to 88.20. I like this one. We are low basing here. I would love to see a little bit more price action on the downside and then a breakdown off of this. So really looking at 88.80. 88.80 would be a nice entry here on dollar Swiss franc. Euro dollar should look really strong. It looks great, looks strong. Thing is, again, euro has just had a really big burst. The fact that it's had a really big burst, I'm expecting it to take a little rest. All right, so let's let it rest and possibly have a pullback. But again, if someone says, hey, Rob, I need to get in a trade right now, which you don't need to do anything, but I'm looking to get in a trade here. Euro dollar's got all the momentum right here, right now. Any little pullback, any little base, I think you want to be a buyer on this one. It just, to me, looks like it's run its course for this little run. Need to see a little bit of consolidation. Let's go ahead and wrap this up. So volatility is high. Expect this tariff news and these tariff wars, they're getting more and more announced, going to continue to cause growth fears. Growth fears send safe currencies higher and risky currencies lower. That's just what happens in growth scares. Thanks for joining me, everyone. Take care. Goodbye, everyone.